if you're earning over £100,000, some of your income is effectively being taxed at 60%, and you probably don't even know it. But don't worry, with a little bit of tax planning, we can quite easily help you get all that back. We all have a tax-free personal allowance of £12,500. But when you earn over £100,000, your personal allowance reduces by £1 for every £2 you earn. So if you earn £125,000, that means your personal allowance will be zero. And it's because of this that any income that falls between 100 and 125,000 is effectively taxed at that 60% rate. It's a little bit complicated, so I'll run through the numbers in a fairly simple way to try and help explain. So if you were to earn £100,000 and receive a £1,000 pay rise, not only will this cost you 400 quid in tax at 40%, but you then lose £500 of your personal allowance. So now that extra £500 will also be taxed at 40%, costing you another 200 quid. Unfortunately, that means your £1,000 pay rise just effectively costs you £600 in tax, or 60%. And a lot of people can get taken over the 100,000 mark by bonuses towards the end of the tax year, so this can be a really important consideration for a bit of last minute tax planning before the 5th of April. So how do you get your money back? Well, quite simply by making pension contributions. If you're earning the full 125,000 and pop 20,000 into your pension, you'll receive basic rate tax relief from your provider, turning it straight into £25,000. In turn, this brings your total taxable income back down to 100,000. So guess what? You now get your full personal allowance back. Just by doing that, overall, you'll save yourself a whopping £10,000 in tax and get that £5,000 of relief straight into your pension. £15,000 extra without actually earning any more. Pretty helpful. This has an even greater effect if your pension contributions are made salary sacrifice. It means you can get up to 67% tax relief by making contributions in this way. If your employer passes on their national insurance savings, you'll turn your £20,000 pension contribution into 28,450 quid, save 15,000 in tax immediately, and 500 in personal national insurance. So you'll be a whole £23,950 richer simply by making pension contributions. Now, your brain is probably already turning to mush by all those numbers, and most people earning that kind of money often don't have the time for this type of planning. So it's a great idea to get an advisor involved if this affects you. What a great question for an advisor though. Can you make me almost £24,000 richer without needing to earn a penny more? And the best thing is, the answer's potentially yes. So if you're earning over 100,000, maybe take some advice, because your money really does matter.